Hi everyone, welcome back to another interesting video on daily market analysis and stock updates. In this video, we will be discussing about the three major important updates in the market from Tata Chemicals and Airtel and Mahindra stocks. So we will discuss these details in this video and we'll also do a short analysis on Nifty and Bank Nifty for tomorrow in the end of this video. So before going to that, like this video and subscribe to our channel Financial Radio. Moving on to the first update we have from Tata Chemicals and Tata Group. Tata Chemical shares have been on a remarkable rally, soaring to record highs in just 6 trading sessions. Let's dive deep into the details. Tata Chemical shares witnessed a staggering 14% surge, reaching an all-time high of 1349.70 rupees on the BSE. This surge comes amidst the reports speculating a potential listings of Tata Sons, the parent company of the Tata Group, in which Tata Chemicals holds a significant 3% stake. What's driving this remarkable rally is the question arising. Well, it seems that investors are buzzing with anticipation over the prospect of Tata Sons listing on domestic stock exchanges. According to reports, Tata Sons may make its debut on the stock market within the next 18 months. Market analysts suggest that this move could lead to a simplification of the complex holding structure within the Tata Group, potentially unlocking value for shareholders. In fact, one report estimates Tata Sons valuation at around 11 lakh crore rupees with an IPO size projected at 55,000 crores. Let's take a closer look at the shareholding pattern of Tata Sons. The majority ownership lies with Dorbaji Tata Trust and Ratan Tata Trust. Tata Motors and Tata Chemicals each hold a 3% stake in the company, with Tata Power and Indian Hotels holding smaller percentages. According to investment experts, Tata Sons ownership in Tata Chemicals alone represents nearly 80% of the company's overall market capitalization. This potential restructuring could lead to a significant re-rating of Tata Chemicals' intrinsic valuation. Now moving on to the second update we have from Airtel and Singtel. Singaporean telecommunications conglomerate Singtel has divested another 0.8% stake in Bharti Airtel to US-based investment firm GQG Partners. The transaction is valued at 0.95 billion Singapore dollars. Singtel previously sold 3.3% shares in Airtel for approximately 2.54 billion Singapore dollars in 2022. Following the news, Bharti Airtel shares surged as much as 1.6%, reaching a fresh 52-week high of 1213.05 rupees on the BSE. This uptick reflects investors' confidence in Airtel's prospects. Singtel, a strategic investor in Airtel for over 2 decades, will now retain an effective stake of 29% in Airtel, estimated to be worth 33 billion Singapore dollars. Singtel's capital recycling efforts aim to unlock value from its assets, with the total capital recycled amounting to 8 billion Singapore dollars since 2021. This strategy has allowed Singtel to fund the growth of its data center and IT services, as well as reduce net debt by 3.2 billion Singapore dollars as of September 2023. Additionally, Singtel has returned 0.8 billion Singapore dollars in special dividends to shareholders from capital recycling. Arthur Lang, Singtel Group's CFO, expressed satisfaction with the divestment, noting that it strengthens the company's capital position. He emphasized Singtel's commitment to a disciplined capital approach aimed at delivering sustainable returns to shareholders. GQG Partners, led by Rajiv Jain, is bullish on the Indian market and recently acquired stakes in various Indian companies, including Airtel. This move underscores GQG Partners' confidence in India's digital transformation and long-term growth prospects. With Singtel divestment and GQG Partners investments, the Indian telecom sector is poised for further growth. Now moving on to the third update we have from Mahindra Mahindra. Shares of Mahindra Mahindra took a downturn, dropping by 4% on the BSE as the company's promoter entity carried out a stake sale worth of 2,184 crore rupees. The promoter group entity, Prudential Management and Services Private Limited, sold 0.9% stake in the company via a block deal. This move comes as the family seeks liquidity for specific needs following the transmission of shares held by the former chairman, late Mr. Keshav Mahindra, to his family members. Despite the reassurance that the family intends to retain its status as a promoter group and has no further plans to sell shares in the foreseeable future. The market reacted swiftly. In more positive developments, Mahindra and Mahindra signed a significant supply agreement with Volkswagen for electric components, marking a deepened collaboration between the two companies. With an eye on the future, Mahindra aims to capture a significant portion of its sales from electric vehicles by 2027. The company plans to launch 5 all-electric SUVs in India starting from December 2024. Additionally, Mahindra plans to introduce an electric version of its popular off-roader, the Thor, future further bolstering its presence in the EV market. Despite the recent dip in share prices, Mahindra and Mahindra continues to perform well in its auto vertical. In the quarter ended December 31st, 2023, the company saw a remarkable 61% increase in net profit, driven by strong performance in its auto segment. Revenue for the same period also witnessed a healthy growth of 16%, reaching 25,642 crore rupees. Operating profit or EBITDA grew by 10% to 3,590 crore rupees, showcasing the company's resilience amid the market fluctuations. Now, before moving on to Nifty and Bank Nifty analysis for tomorrow, like this video and also subscribe to our channel Financial Radio and comment down your views and opinions in the comment section below. Now, moving on to Nifty. Nifty opened a gap up opening and after that it has broken down the previous day high, previous day close as well, and after that we can see some volatile session and it made a new day low 22,430, and after that we can see good bullish momentum which led to a new day high as 22,525 points. So and Nifty closed at 22,483 points. So for tomorrow levels, Nifty day high and the day closing price may act as good levels if Nifty opens gap down opening. But when Nifty opened a gap up opening, the day high and the previous day closing price may act as a good supports. The day low that was 22,430 may not be very much important if Nifty opened a gap up opening. But when Nifty traded nearby that level, that day low may act as a good support. Now coming to Bank Nifty acted differently from Nifty. Bank Nifty opened a small gap up opening and after that it has broken down the previous day closing price directly. And after that we can see a reversal, but the breakout didn't sustain. A consolidation move has been seen and after that sellers retained the selling move. And in the second half of the market, again market tried to break the previous day closing price, but it didn't sustain. So in the end, Bank Nifty closed at 47,788 points. The day high is the day opening, which is 48,071 points, and the day low is 47,747 points. These levels may act as good levels for tomorrow. So when Bank Nifty opens a gap up opening, the day closing and the day low will act as good support for tomorrow. And if we opened a gap down opening, the day closing and the day low will act as very good resistance when coming to Bank Nifty. But if the gap up is high, the day closing may act as a good support, but the previous day high will act as a good resistance when market reached that 48,000 and 48,071 points level. That's all we have for today. If you really like this video at any point of time, don't forget to subscribe to our channel and also comment down what you liked in this video in the comment section below. So thanks for watching.